Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Asian markets are under some pressure early this morning as the market took some cues from the declines that we saw on Wall Street on Friday.
The Reserve Bank has sent out is, as you said, a further list of 240 accounts that it wants recognized as NPA.
The committee will take a look into various issues to resolve these power, coal-based power plants.
We should be able to maintain the growth, and guidance is between 15 to 20%.
Okay, that's the first tick that you have. 0.2% higher on the Sensex. The Nifty is holding on to 11,300. It's a good opening.
I think if you're selective in the PSUs, and I'm not taking all the PSUs as a basket case here, there is an opportunity for money to be made.
It's another record high that we're sitting on for the Nifty and the Sensex, but they're currently off their highs.
Been very close to the highest point of the day. Remember, the highest point for the Nifty today was 11,309, and what is participating today for the Indian markets is the Bank Nifty.
Good afternoon. You're watching Closing Bell and has been bulls in control once again. The morning dips have been bought. Right now, this market's holding on to green. And that's again happening against a backdrop where the world isn't feeling that good. Most of the markets across Asia and Europe have actually been negative or are trading negative. But right now, the bulls are refusing to let go of leadership of our street. This is Closing Bell. I'm Surabhi Upadhyay, and joining me on the show today is Prashant Nair. Good afternoon, Prashant.
Hi, Surabhi. I mean, so it's all banks, right? PSU banks. Once again, there's ICICI Bank, the board. So, I mean, a large portion of the contribution to the Nifty coming in from SBI and ICICI Bank, and it's right up there. I mean, Reliance actually is also adding about 15 index points, but disproportionate number of banks that you usually actually see on the Nifty. That's the Nifty Bank. I mean, of course, all banks, but they're also dominance from ICICI. So we'll discuss all of that and more as over the next 60 minutes or so. I mean, Surabhi, you talked about global stuff today. Not too much might be happening, but the fact is that as we were discussing on Friday late afternoon as well, there is nothing sort of worrying. I mean, if you look at the global markets, I mean, the big markets which could be described as so-called Pied Pipers, the US big indices or broader indices, it's actually looking pretty okay, you know, in an almost cruise control kind of fashion. And the big one for India, of course, is that oil continues to be in a cool-off kind of phase. Yeah. I mean, last week was flat. Before that, 2 weeks prior to last week, it lost about 8%, and it's not done anything on toward today. So I think those are things to keep an eye out on. But that is Mr. Deepak Parekh, Chairman HDFC. The numbers just came out a while back. Let's listen in.
In April 2018. At our board meeting held today, Mr. Bansi Mehta and Dr. Bimal Jalan have tendered their resignations as independent directors. You would appreciate that Dr. Dave, Mr. Suktankar, Dr. Ghosh, Mr. Bansi Mehta and Dr. Jalan have stepped down in phases from our board, have been exemplary directors, and the corporation has benefited deeply from their contribution over the years. In light of the resignations of Mr. Bansi Mehta and Dr. Jalan, which have been accepted by the board earlier this morning, the resolution number 5 and 6 pertaining to the continuation of their directorships have become infructuous. So resolution 5 and 6 have become infructuous. All the directors of the corporation are present at the AGM or will be present at the AGM. Representatives of both the statutory auditors and secretarial auditors are also present. During a phased manner from now, we will add a few more members on the board. So you'll meet them next year, but the nomination committee will discuss a few names and we'll add a few new members in the next course of the next 3 months. I'll now proceed with the agenda for the meeting. I'm sure you all have received the annual report and the notice convening this annual general meeting. Since there are no qualifications, observations or comments on the financial transactions,
Okay, we'll sort of come back to that AGM and we'll dip in and out, Mr. Parekh speaking there, but we've got the numbers for the first quarter. There is flashes at the bottom of the screen. HDFC board has approved raising up to, I think that was $1.5 billion. and that flash went away too fast, but we'll just pay attention to that. But I mean, of course, the AGM is going to discuss what's happened in the year which has already gone by. Important note, the comments from Mr. Parekh, but we've got numbers here for the first quarter to really focus on. Let's quickly move forward. We'll have Abhishek with us in just a bit to analyze the HDFC Q1 numbers in some more detail. But how should you position yourself in the last hour of trade? Ashwini Gujral and Mitesh Thakkar are with us with their closing strategies. Gentlemen, afternoon. Thanks very much. Ashwini, why don't you go first? 33 points on the Nifty. What would you do?
See, today's corrections intraday have been very shallow, both on Nifty and Bank Nifty. So that means momentum remains intact. And even for the last hour, it looks like, Bank Nifty could move higher and close around the highs of the day. So that way, corporate lending theme, continues to play out. So I would think all sorts of declines on PSU banks and other corporate lenders. Today, the new corporate lender is Axis Bank, which has started to move up. So overall, this bunch is doing well. All day, retail private banks have been lower, and we still are able to gain on Bank Nifty. That shows strength. Having said that, individual stocks, Ultratech is a buy with a stop of 4180, target of 4300. HUL is a buy with a stop of 1660, target of 1710. And Bajaj Electrical is a buy with a stop of 600, target of 630.
So Ashwini, I noticed that you're not chasing PSU banks at the moment. Is this a bus that's already left? So what should the approach be? Whether it's PSU banks or a name like Axis, then what are the levels, if at all, you'd advise a re-entry or a fresh entry?
See, one thing is clear. In case, the entire theory of corporate lending is changing and, everything is getting sorted out, then this rally has not even begun. But sitting on a 4 or 5 day rally, I would probably still tend to be with the larger PSU banks like, Canara or SBI, even Axis Bank. Because this has a tailwind. This is not your normal routine rally without a reason, and it should correct. If this thing starts to go and Axis Bank will further confirm it, you will have another big day tomorrow itself. So that way, I don't think there is a lot of risk, even on banks which have rallied quite a bit, because they are so down in the dumps, and with such large short positions. I think there is more on corporate lenders on the upside.
Ashwini, but to be fair, it is still just perception, right? Which is that things are maybe worse is behind and all of that. And on the back of that, things like BOB have moved up from 100, 105 rupees to where it is now, 40, 45% in a few sessions. So it is still just that. But charts are telling you there could be more. And you said you'd stick with SBI, Canara, etc.
See, the issue is market wants to be ahead by 6 months. So what they are trying to assess is that whether in 6 months you would look back and say that that was the worst point. And it is also a fact that in all of these things the market will discount 5 out of the 6 recoveries, which happens the 6th one being the real one. So this only time will tell whether this is really a turnaround. If it's a turnaround, there is lots to go down on retail banks and lots to go up on corporate banks, and for the moment we should assume that things are working out.
Okay, well, right now that's the position on banking. Let's also welcome Mitesh onto the show. Mitesh, thanks for joining in. Now, clearly, the bulls are announcing that they're still very much in charge of this market. What are your last hour bets?
Yeah, good afternoon. So I think, so we never had any kind of strong correction, so there was no worry as such in that sense that there's some kind of selling or profit booking happening at higher levels. Yes, we are overbought, but I think then, markets going at new highs will be in overbought situations. For the time being, we continue to maintain a long bias. In fact, Axis Bank is on my list. We were just discussing the stock. It's moved up slightly, but on any intraday dip to around 563, 564 would be excellent buying opportunities. Keep a stop below 554 half. I think the minimum I'm looking at is 585. Possibly 605 can happen over here. And BEML is a buy. I think again a beaten down stock trying to join on the upside now. That's a buy with a stop at 850 for targets of 930.
Okay, gentlemen, stay on with us. Lots more questions coming your way. But right now, let's just go and do a deep dive in those HDFC numbers that we got. AUM growth of 18% seemed to be in line with the poll that Abhishek put together for us. So we have him here. Abhishek, what's the fine print?
Well, to begin with, Surbhi, the numbers have been reinstated. So, as per IND-AS method of accounting. So, AUM growth of 18% YOY to about 3.72 lakh crores. That has a individual loan portfolio growing at 25% plus. The individual disbursement themselves were up 17%, and the average ticket size in the individual portfolio has increased to 26.7 lakh per customer. The net interest margin has fallen to 3.5%. Now, as per IND-AS, the calculations are different for net interest margin. So we need to see why this net interest margin fall is there and understand from the management with respect to the decline in net interest margin from 3.5 to from 4% to 3.5. Because given the fact that the spreads have been steady at 2.28 versus 2.29 sequentially, asset quality deteriorated a bit at 1.18 gross NPA versus 1.11. The non-individual portfolios gross NPA increased by 20 basis points sequentially to about 2.38%. The net profit, if you do a like-to-like comparison based on IND-AS method of accounting, is at 2190 crores. That compares to 1410 crores, up about 55% plus on a YOY basis.
Okay, Abhishek, thanks very much. So that is HDFC in some detail. General Insurance Corporation, the bottom of the screen, GIC, is also reporting numbers, and gross premium up 9.5%. I think we'll have the profit number also come through. The stock has rallied sharply. I mean, 7.5% plus. Profits have doubled, 771 crores compared to 391 crores. And we actually should try and put out more details from these numbers, which are just coming out. So that's a big move. 9% now as we speak, 365. Mr. S.P. Tulsian is with us. So is Mayuresh Joshi. Ashwini and Mitesh, of course, stay on with us. Gentlemen, thanks very much. Mr. Tulsian, your thoughts? I mean, what we were just discussing, the corporate banks. As Ashwini was saying, I mean, you know, 5 out of 6 times this rally would falter and wouldn't really go anywhere. Is this one of those, or are we now really discounting something real?
See, I think things are seeing improvement on the corporate lending fronts also, and actually with every banks having declared their numbers are seeing this assumptions getting reinforced. Whether, you know, in fact it has started with the DCB Bank and then, you know, followed with the Federal Bank, and then thereafter with all, whether it is talk of Yes Bank, Kotak Bank, or maybe, you know, day before with the ICICI Bank and Bank of Baroda also. The first thing that, you know, what we have been missing in all these things was the credit growth. In fact, the whole universe were focusing more on the asset quality, whether it is the lender or it is the investor, that it should not deteriorate further, and that was the wrong assumptions to take a call on the banking stocks, because unless until you have the credit growth thing coming in, you cannot really take a future positive call on any of these lenders. So that is seen to be happening now. Bank of Baroda has demonstrated a credit growth of about 20%. We have seen the growth of about 11% in case of ICICI Bank, of which 15% came in from domestic and rest from the global international operations. So yes, the things are improving, and in fact what is happening now, that post this NCLT resolutions, I think the sentiments and the mentality or the attitude of the borrowers also have changed. Though no doubt that the lenders have become cautious, because obviously they have to turn cautious with the strict measures having initiated by the RBI in terms of the recognition, in terms of the recovery, and in terms of the provisioning. But the things are seen improving quite a lot, and in fact we have been saying this, that the gross NPA of 10 lakh crore plus, which we have been seeing, will see the drastic reduction. I won't be surprised to see it reducing by, on a collective basis, by about maybe by end of September, 30th September, I'm not referring for 30th June, falling to as low as maybe sub 7 lakh crore. And that will be seen quite positive, because obviously thanks to NCLT resolutions, we have been seeing that happening in bits and pieces now in many of the banks. We have already seen that having recognized. Whether you talk of Canara Bank or you talk of Bank of Baroda, I'm talking the larger ones. In fact, every PSU bank is having the share of the NCLT resolution benefits in terms of the reduction in gross NPA and the recovery. So I think that things are seen building up, and maybe it will take one more quarter, and by 30th September, because once you have the effect of this 12th February resolution circular also getting implemented by the banks, you know, for which the deadline is 31st August. The reflection of which will be seen in 30th September account. So that will really be seen to be the final outcome, you know, where the more confidence will be seen gained by the market on the corporate lending fronts.
Okay, all right, Mr. Dulcian, please do stay on with us. We'll just go back and listen to Mr. Parekh talk about the HDFC numbers.
Financial year 18 and notice convening this AGM through email to those shareholders who had registered their email addresses. This has resulted in considerable savings toward printing and postage charges. Physical copies have been sent to those shareholders whose email addresses were not available or who have specifically asked for the report. As required, the corporation has appointed Mr. L.N. Bhatia, Managing Partner, L.N. Bhatia and Associates, Practicing Company Secretaries, as scrutinizer to scrutinize the e-voting process. I would like to inform you that in case you have not been able to cast your vote through remote e-voting facility, you can now cast your vote electronically after the discussions on all the resolutions have concluded. Before I conclude, on behalf of the corporation, I wish to place on record, and on behalf of the Board of Directors, I wish to place on record our profound gratitude to all our shareholders, customers, depositors, lenders, and regulatory authorities for their continuous support and having reposed confidence in the corporation, as also to our employees for their hard work and sincere dedication. I would like to invite questions, if any, from you. There are already many speakers. May I request you to please be brief and restrict your questions to matters set out in the notice and the annual accounts for the year ended. I would also like to inform you that only a shareholder is entitled to speak at the AGM. As is the custom, I'll answer all the questions after all shareholders have finished.
We'll cut back to it, so there'll be an opportunity, of course, as always, for shareholders to ask questions, and we'll cut back. We'll, as I said at the beginning, keep dipping back into listening to what's happening there. 2032 odd on HDFC. Mr. Tulsian, so just crystallize the view with actionables in terms of stocks in that space, corporate banks. What would be top of mind for you?
See, maybe after seeing the numbers, my first pick would be on ICICI Bank, because it is very much essential to look for two things. One is the credit growth and second is the valuations, because as I've said that I'm not too worried now for the credit growth and maybe slight dip in the NIM. In fact, NIM contraction has been seen practically in case of all the banks, whether you talk of HDFC Bank, IndusInd Bank, Kotak, or maybe ICICI Bank. So I'm not too worried if the NIM has contracted by about 5, 7, 8 basis points, because there is always the leg effect to have the matching rise in the advances also, because the cost of deposit is seen rising. So for I'll be focusing on two things: credit growth and the valuation parameter. Taking that into account, I think my first pick would be ICICI Bank, which I've said in the morning also, that I'm quite convinced and happy with the other parameters and the other figures or the data which we have seen in the Q1 numbers which we have seen day before. If you want to, and obviously the choice of the preference for the continuation of the investment choice goes with the Kotak Bank, and then followed by HDFC Bank, and fourth pecking order could be Yes Bank. I'm not saying that IndusInd Bank, RBL banks are not good at these levels, but they are all maybe can be considered as well. Then maybe in the second run private sector bank, I think DCB Bank and Federal Bank, two are really looking quite good. Again, largely on the valuation parameter. Coming on the PSU banks, if you really want to take cues from the numbers having reported by Canara Bank and BOB, I think SBI qualifies as a safe bet. And if you really want to play for high beta, then PNB also looks a good bet, because whatever negatives which we have seen having recognized in the March quarter numbers, and June quarter again can throw positive surprises by PNB also, which again can show a relatively higher or maybe relatively better rise than any other PSU bank. So these are the choices, but again, you need to have a little longer horizon of maybe anywhere between 3 to 6 months to enjoy the benefits. As I said, that 30th September is the key to take a call on this on this end of the pain and revival of the corporate lending as well.
Okay, it's all about the banks. That's been the kind of time space that we've been in the last few days, and that's the Bank Nifty for you. Mayuresh Joshi also with us this afternoon. Mayuresh, I want to draw your attention now to Godrej Consumer. That's been the other key result of the day. Numbers were fine, margin expansion about 13.5%, 14% top line growth. But the question is, what do you pay and then what do you get for it? So is this priced to perfection? Would you advise a fresh entry in Godrej?
Afternoon, Survi. I think the numbers were quite reasonable. Then again, I think the domestic volume growth led by realizations, I think is something that drove the overall business. What probably disappointed within the African business would have been the South African performance. But again, I think the kind of strategies that Godrej probably has in place, the kind of new products and product innovation that it intends to bring to the table is something that can define the value creation, both in terms of volume growth for these new products, abetting the realization growth as well. For Indonesia in particular, I think the go-to-market strategy, and again, I think changing of their ad and PR guys, I think there's going to be some cost optimization on that front. For the India market itself, I think the middle Indian market, or the modern towns as they call it, along with innovative products, is something that will keep on driving the volume-led realization business for India. And what you probably have seen in the past few quarters in terms of the gross margins actually moving up, 35 to 40% of the delta probably came in through cost savings for the input cost inflation that we did not witness in that proportion that one expected. And the other was obviously cost optimization. For the African business particularly, I think the expectations that the management might carry through in terms of higher teen growth on the top line along with higher EBITDA growth, I think that can be a drive overall business. When it comes to valuation, so even if I assume an EPS around 28-29 rupees, the multiples is in higher of around 43-44 on an FY20 basis. So I think consistent volume and number is something that will drive the stock performance and re-rating. At the moment, I think our rating on the stock continues.
Okay. So that is Godrej Consumer. Full analysis on that from Mayuresh. We take a very quick break. First on closing bell, we're up 40 on the Nifty. We'll also bring in Jay Bala of cashthechaos.com, and he's had a few good calls recently. We discuss those and more, so that conversation also comes up right after this break.
Welcome back. So it's a little flat on the mid-cap index, you'd have to say. Overall, I mean, it's the large caps that are doing well off if you're looking at it from the indices point of view. Rallis India is making a bit of a move. There are always some stocks flying around. So Rallis is up 3.5%. Beyond that, it's really all about PSU banks today. Idea is reporting numbers, by the way, so keep that on your radar as well. The expectation is that it's going to be another painful quarter. Loss will continue, ARPUs will fall. Right now, Idea Cellular looking at a bit of an incremental gain coming in as we speak. Well, on that note, let's get you some more trading ideas. We have Sandeep Wagle joining in. Good afternoon, Sandeep. What are you working with?
Afternoon, Surbi. I would go with a buy in Ultratech Cement, stop loss of 4186, target 4350, and a buy in a Union Bank, stop loss of 86, target 96.
Okay, Sandeep, we'll see you in a bit. Those are two ideas coming in from Sandeep Wagle. There is a flash at the bottom of the screen considering the government saying they're considering launching this financial year a new exchange-traded fund for public sector stocks, essentially. But we already have the CPSE ETF, etc.
We've got the Bharat 22, Tranche 1, Tranche 2. They've been the primary vehicles for divestment. I mean, other than that, we haven't seen anything big ticket. And of course, now there's talk of NHPC and NTPC, which is, of course, smart accounting.
But that is essentially from one pocket to the other pocket. So
Exactly.
Anything real which is going on. And they're saying the disinvestment target this year is going to be challenging. You usually tend to hear this kind of stuff late in the second half of the year and not the first half. I mean, although we are crossing over to the second half now, pretty much, but maybe a little early in the day. We'll try and get you more details on this one as we go along. Mr. SP Tulsian, Mayuresh are still with us. Mr. Tulsian, just a quick word on this BEML, BEL. Is this just a function of the big sort of price correction these stocks have taken, or is there something which is really going to happen? BEL, for example, was awarded contracts worth about $2.5 billion. But they're yet to see, the work orders coming through, cash starting to get paid, which will initiate BEL to be able to start work on these projects. So, I mean, is something really changing at the margin? There was some talk of the defense policy, an updated version maybe being put out. Will that make a difference? Your thoughts, sir? BEL and BEML.
See, Prashant, first coming on BML, one can understand that the things will be seen very difficult for the government to induct a joint strategic partner, because government have decided to induct a strategic partner by divesting 26%, which they have been holding in the company of 54%. So they will be remaining they will continue with 28%. 26% is being given to the new investor as a strategic investor. But that has been vehemently opposed by the Karnataka government. And in fact, we lost the hopes the moment we have seen the alliance government or the joint Congress and JDS government seen having come in the Karnataka, that these things are not going to happen. At least in this new regime also, unless until obviously the alliance doesn't work and we see the fall of the government and all sort of things. So BML is definitely ruled out. If you want to take a fundamental call, then it's having a robust business. They have a strong presence in the metro space, and we have been seeing the kind of growth the metro network is seen being laid out in the whole pan-India, practically in every city. So if you take a fundamental call, then it holds a lot of potential. But I think that because of this induction of strategic investor, putting on hold is seen a big negative, and that is what is damaging the share price and the sentiments for BML. Now coming on BL, in fact, the correction is seen quite surprising, and in fact, the thing started when the company, declared the bonus of 10%, one bonus share on 10 shares, about maybe 1 year back, which was, unwarranted with such a petty bonus issue. In fact, that was seen more a mockery, and in fact, post then the things have started correcting. I'm not saying that that's the only factor, but it has gone totally out of focus. But if you want to take a fundamental call, look into the order book positions and the situation, the kind of position they are enjoying, and the focus of the defense spending and the order inflow which are likely to come into the BL fold, I think this is an excellent stock amongst the defense space. Whether you talk of the Hindustan Aeronautics Limited, you have many other PSU defense stocks available listed in that space. Maybe one can add Cochin shipyard also, a kind of defense or maybe proxy to the defense play. So BL definitely looks a very positive stock to have it in the portfolio. I don't think that the further downside is seen in the stock once you see the revival in the buying, which we have seen in case of PFC and PFC also, which has started moving up from 70, 72, now having moved to a level of 84, 85 just in last couple of months or maybe 1 month. Similar things and pattern can be seen in case of BL also. So fundamentally, I don't think that further upside is there, but we are holding extremely positively on the stock if held with a view of about maybe 6 to 12 months.
Finally, Mr. Tulsian, just stretching a little bit because it's earnings, so I want to run these two companies by you, New India Assurance and GIC. I don't know if you've had a look at them in the recent past. Both of them came out with numbers. The gross premium growth for New India was about 12%. For GIC, it was about 9%. GIC's got very smart profit growth. I think some 90% odd. The stocks have suddenly shot up and volumes are very heavy today. I mean, for GIC, I think 15 times the 10-day average. Should one be looking at these insurance plays at all, or better to stick to the private sector names?
See, Surabhi, I have not seen both the numbers, but yes, what I feel that we should stick, because insurance is a very, what you call hot space, where the smart investors or maybe the long-term investors are seen coming in. But I don't think that again, because of this PSU tag and because of the, I agree that 1 quarter may be good by having posted by these PSU, these twins. But we won't be comfortable in taking a call on the PSU insurance companies going forward. But yes, if you want to, and we are specifically more positive on the life space going forward, whether you talk of HDFC Standard Life or maybe ICICI Pru, again, maybe SBI Life is definitely again a PSU, but even that is holding quite a good potential. Though with the pecking order on the list, it will remain on 3rd place. So we will be having our reservations for going for the general insurance stocks, and that too if it has a PSU tag. Yes, going forward, whether you talk of HDFC Standard Life or maybe ICICI Pru, again, maybe SBI Life is definitely again a PSU, but even that is holding quite a good potential. Though with the pecking order on the list, it will remain on 3rd place. So we will be having our reservations for going for the general insurance stocks, and that too if it has a PSU tag.
I totally take your point, Mr. Tulsian, because Prashant, what do you say? You might be a PSU insurance company. Next day, you might be a bank. You might be owning a bank. You might be owning something else. I don't know. That's on a lighter note, but thanks, Mr. Tulsian.
Absolutely. Absolutely. Mr. Tulsian, thank you very much. Just want to put up GIC, if you can. I think it's up 13%, 13.5%. It's not a direct insurance company. It reinsures business from insurance companies. I mean, basically takes rights It's the insurer for general insurance companies, essentially. It had fallen a long way, and it's now starting to, it's a one-day move, flash in the pan, who knows, but it's coming up very strongly. Before I bring in Jay and Ashwini, any thoughts on GIC, on the other two names we were discussing with Mr. Tulsi, and BEML and BEL? Yeah.
See, insurance stocks haven't really participated in this financial move. So GIC has gone through a strong bear market. I don't think it's quite GIC Housing Finance, right?
No, GIC RE, GIC Reinsurance.
Let me pick out.
Which is the 37, it's at about 378. Yeah.
Yeah. GIC basically today's bar has taken out, I think, 2-3 months worth of data. So this sort of bar is often made, once some large buyer is in. So my sense is maybe this could also get back towards, the listing high about 435, 430. So I would think it's finally making some sort of a bottom.
Okay, those are the insurance plays for you that are on the move. PSU insurance names doing well in today's trading action. Speaking of highs, it's time to bring in Jay Bala of cashthechaos.com. He's joining in, talk technicals from a slightly longer term time frame as well, those who are looking at the market beyond just the daily action. Good to have you on the show, Bala, and I mean, must say hats off to you, because at least on the Nifty, I remember you did say that we are going to look at all-time highs around August, and that's pretty much how things have played out. But the question is, where from here? Do you see this sustaining? Do you see this move on the Nifty, the Sensex? Do you see it building?
Oh, definitely. It's going to sustain a lot. If you look at the comments that's coming from the market participants, they are still in denial. They're talking about, 5 stocks lifting the Nifty and, Hrithik stocks lifting the Nifty and things like that. They conveniently forget that, GAIL, Mahindra and Mahindra, Bajaj Twins, they've all been clocking record highs. Even Asian Paints, even HCL Technologies, just out of the front of my head, I can quote so many names. Yes, the participation has been narrow and is bound to get broader. And when the markets go to record highs, I think the participation will still be narrower than what it was in 2016. But the high is a high, the trend is a trend. And, we are looking at something like 12,000 to 12,660 for the Nifty before we can think about some sort of a reversal come through. I won't be surprised even if the market were to scale 12,000 as early as the first week of September.
First week of September. Okay. Jay, I mean, where would you be interested in terms of trading? Or rather, how would you express this view? Just buy the Nifty or buy the stronger stocks there within the Nifty?
A very fair point, Prashant. Unless you have an idea of what to do, these index levels are meaningless. You need to have an idea how to make money. And, this is going to get translated in the form of, strength in auto names like Maruti, which have been bullish. And I've been saying since it was about 8,400, it's heading to, 11,000 plus. And that's going to be one of the next leader taking hold in the market. And ICICI, it's looking pretty good. It's heading for something like 380. And it's if you already haven't taken position, still you can buy pullbacks. And SBI is possibly one of the only PSU names within the PSU banking stocks that's likely to go back and test the highs made back in 2018. But the rest of the PSU banking stocks are having a large relief rally. Even that's a tradable bounce. And you can even look at something like metals, which I said last month that Shanghai Composite is very close to a bottom. It's doing that. It's clocked a higher high and a higher low on the daily charts. So that's going to take hold. Once a breakout comes about 3,060, you're going to see metals name rally strongly. And you can also look at mid-cap cement names, something like OCL India and even Sagar Cements, which is I'm expecting it to cross something like 1,250 to 1,300. And you can have OCL India. I'm expecting it to cross 1,700. Leave alone the frontline, cement names. They are likely to have a large rally, but they need not go to record highs.
Okay, so Jay, the point is you were talking about ICICI Bank and Maruti. What about the earlier stars, the old leaders? Now, from a positional trade point of view, are you better off chasing, let's say, an ICICI Bank, perhaps some of the other corporate sector lenders? Or should you just stick to what worked in the earlier leg of the rally? That's the Bajaj Twins, Reliance, HUL, TCS.
it's a diverse pack there. Bajaj Twins are probably going to go and take some rest and cool off a bit. The same goes with IT names like TCS and Infosys. This doesn't mean you need to turn bearish. You just need to know where to take the chips off the table. So that's exactly what you need to do with these leaders. But if you come to Reliance, I still think it's got some more legs to complete the ultimate price objective. I think that's placed something close to 1250 to 1265. But I would be bullish on it with a reduced weightage to it. But if it were to drop below something like 1090 or 1075, that will be a short-term re-entry point for me. But you need to be very mindful that you have to have a lower allocation towards Reliance. So I think Reliance will be the only one from the previous leaders that's going to do well. And the rest of them are going to pass on the baton to metals named pharmas and the autos of the world.
Sorry, pharma, you're saying pharma should do well, Jay? Is that what you're saying?
That's right. I'm expecting the BSE Healthcare Index to scale at least 17,250, and that's going to be a sizable rally. I think I recall, a couple of months back, we need to split the pharma names into two categories: ones that will make record highs, and ones that will have a large relief rally. And amongst that, Cipla was one of the stock, and Biocon was another one. I still maintain those going to be the first ones to cross the 52-week highs. And I think Glenmark was something I was very bullish. But that's outside the frontline names, but that's likely to be a three-bagger. So that kind of potential is available even within the pharma names.
Jay, are you? This is all purely technical analysis, or are you mixing it up a little bit? It's only half joking.
Prices got to Prashant. One thing that's put me in good stead is because I don't, concern myself with the news that's coming out, and whatever the charts tell me, I just blurt it out. Sometimes it's, I don't feel like saying it, but I have to be truthful to the charts. I have to blurt it out. So that's the reason why, the way I'm interpreting is I can be wrong sometimes, but whatever it is, it's already put me in good stead always.
So, okay, on that note, any stock ideas for us? And maybe a word on cement, because this quarter we've seen some good numbers. That's got the market a little interested around cement stocks. Do you see a bigger rally building up in cement?
Yeah, definitely. I think there's some more rally within the cement space. Within the frontline cement names, I would expect Grasim potentially to clock fresh 52-week highs. But rest of the pack, I'm still doubtful. There are very good names available outside the frontline cement names. As I said, OCL, Sagar Cement, those are good names. But from a trading point of view, Reliance has been doing pretty well. I think we should start concentrating on the group company, which is Reliance Industrial Infrastructure. You have a tradable rally that's coming up, and one can place a stop below 400 and expect somewhere between 480 to 520 in this particular stock.
Okay, Jay, it's always great speaking with you. Appreciate you joining in, and hope you continue the winning streak with the calls. The market is looking pretty good. 50 points now, actually. 11,326 is where the Nifty is at, and it crept up a little bit while we were in conversation with Jay, and it's looking pretty solid. Look at the market breadth as well. I mean, just to assess what's happening, if that is improved, not quite. I mean, 1,400 stocks are higher, the 700 stocks lower. So, I mean, the proportion numbers have changed, but it's basically 2:1, which is, nothing to really complain about. Small cap index is doing quite okay, but the mid cap index was, the last I checked, the mid cap index was kind of flat. That has also picked up just a bit. It's just under a 0.25% gain. It was flat when we started at 230. So that also has picked up. The small cap index is up a full 0.5% plus. Bank Nifty is up 0.75%, and the Nifty is up 0.4. We take a break, very quick one. We come back and we get you some buy today, sell tomorrow trades. Our technical experts are with us. So stay right here.
Also up next, our Monday special, Mid Cap Mania with Nigel D'Souza.